Hey everyone, I'm Scott Cunningham, aka Scottsy Business, and we're back for another amateur investing update where I go through all of my previous months worth of trades, investments, and anything that I'm doing financially to either earn passive income or appreciate value. And we're going to go through all of that, everything I've done in the past month, and my thoughts kind of going forward. Before we dive into all that, I did wanted to note that I'm recording this episode without overhead lighting. It's very similar, but I'm curious to see what you guys think in terms of the lighting quality. I think it's ever so slightly better when the back areas are a little bit dimmer. Let me know though. And before we actually jump in, a quick word from my sponsor. A big thank you and shout out to my sponsor Cake Wallet, which is an open source, non-custodial Bitcoin and Monero wallet that also has a built-in exchange. It's available on iOS and Android. All right, thanks again to my sponsor. Now let's dive right in. So, as you can see, last month was a pretty decent month. It was actually it was the best month that I've ever had for dividends. So, $138 is fantastic, and you can see how this tracks along. This was by far the best month that I've ever had, and yes, it's continuing to grow month over month, and the projected value or the average monthly value is always going up. As long as I just keep doing what I'm doing, I keep reinvesting my dividends, I keep putting a little bit of money in and investing in more dividend stocks and just balancing everything out. We'll go into all the individual investments in a bit, but just making sure that everything's balanced out, and I'm swapping out low yielding stocks and just keeping around my average of 5% yield, and just making sure that I kind of keep on top of that and just move things around as needed, which we will get into. But yeah, going forward, I think this is going to continue growing very nicely. I mean, as you can see with the trend, it has done very well. My total earnings now are $960.31. So next month I will be over $1,000 earned in dividends. The whole point of this dividend portfolio, as I've mentioned many times previously, is that I'm trying to pay my expenses and have them covered passively. So currently, $138 covers about two of my portions, like two utility bills worth of my portion of the utilities. I live with two roommates as well, and my cell phone bill. As this continues to grow and grow and grow, ideally I would cover all of my utilities, cell phone and internet, and then the next milestone would be to start covering my rent and then food, etc., until I can fully cover my lifestyle. And that is the goal of this portfolio. In terms of crypto income, I only got $1. So very, very dismal. But as I've said in previous updates in amateur investing, that I've been really pulling out of passive income just to focus on my growth income. Now, going forward, I'm ever so slightly shifting my focus back a little bit to passive income. I'm not going to bother, withdrawing from the platforms that I am earning on. I'll just keep it there and I'll keep building that up and maybe even add a little bit in and get my Tron passive earnings back up as well. So this should start to very, very lightly get back on track with things as I was doing before, but in a very, very low, percentage rather. I'm not going to be putting very much into this. I still think the next few months are going to be extremely bullish and mainly benefiting off of that from growth cryptocurrencies like Bitcoin and Ethereum, and many other coins, but those are the ones that I'm focused on more or less. And I'm gonna just slowly start getting back into passive income, not taking anything from what I have now, but anything new coming in, I will start saving aside a bit for building my passive income in the crypto sphere back up to where it kind of used to be, and start getting this back on track. So this will start to start going back up fairly soon, and I will actually take it super seriously in 2022. But right now, it's just it's a very, very minor priority and focus for me. I moved all of my other income from my dividends to here, which this is all from music royalties. I haven't really shared that side of things with you guys, but mind you, I do put out music under a different alias, and it's all public and out there. And I earn, $100 here and there. And totally, I've only earned $376.79, which isn't crazy, but I never set out to, I don't promote it or do anything like that. It's just, it's out there. If people want to listen to it, they can. I more so made the music for myself, and then I just put it out there. So I am earning from that, and that's fantastic. And yeah, I mean, I think it's really important to build different streams of income, even if you're not super you don't want to be an artist for the rest of your life. It doesn't hurt to understand how these things work, how, going through all these different processes of setting up different streams of income, understanding how royalties work, understanding how all this works. It really, really helps you in the business world to have a grasp of a lot of these things. And I think it's just beneficial to know, because then, when I get into doing a book release, I'm already fairly familiar with a lot of how copywriting works and a lot of these different things and a lot of these processes and who I have to go through, etc. You learn a lot of that, so it can translate to different things that you're doing. And I do plan on writing and releasing at least 3 books in the next few years. So that will all be tracked in this section as well. I think it's really important to build different streams of income, as I've said, and royalties, whether it's from books or audiobooks or, music or whatever it happens to be, is a great way to build that for the rest of your life. And I mean, if you're really serious about these things too, obviously promoting them and doing different things to keep building that up, and you'll get more and more people who are listening and obviously, or reading or whatever it happens to be, and then you'll be earning more and more royalties. I don't think you should just make music or write a book though, just for the sake of having done it. Although, I mean, why not, right? I mean, if you think you can provide some value in some way, even if you're just writing it for yourself or making music for yourself and you share it with the world, I think there's value to that. And that's basically what I've done, and I have been getting value for that. So it doesn't really hurt to try, right? In terms of my crypto portfolio, at the beginning of July, I clocked it in at $144,730, allegedly. And I'm pretty much back to where I was at the beginning of June now. My portfolio, we all saw a big gain recently. So I'm pretty much back to where I was before in June. And, if things play out the way I hope they will, we will see positive months for the next at least the next 2 or 3 months. And fingers crossed, but we'll see how that plays out. And then in terms of stock portfolio, I put a little bit of money in, did some investments. I'll dive into the individual investments that I did. And yeah, I mean, it's growing. It's been pretty stagnant lately. It is now a little bit higher than this, being at the peak value. But previously the peak was in May, and it was really just because I invested in Bitcoin ETFs, and then we saw a huge dip. So it wasn't really the dividend stock portfolio that was the problem. It was really just the my investment in growth stocks, which always ends up not working out for me. But I am very confident in Bitcoin, so I'm not super worried about that. I'm going to be much more focused on stocks going forward, because I feel like I've been just throwing all of my money very carelessly, I might add, into crypto, and having barely any money left over for investing or even an emergency fund or whatever it happens to be. So I've done the smart thing, and I'm going to start saving up a little bit and have that on the side, and get back into investing in my TFSA for my stocks, because in Canada, as I've mentioned many times, it's very ideal to max out your TFSA because it's a tax-free savings account, meaning that I'm not taxed on any of my gains, but I also can't deduct the losses. And in an account like that, if you just play it super, super safe, you're never going to have any issues with, losing part of your contribution limits and stuff like that, and just grow your account over time. It is nice to be able to, invest in growth stocks like Bitcoin, but if it drops a lot and then you pull out and take a loss, it's super unideal to take losses on your TFSA because your contribution limit is still the same. And if you're taking losses, then you're making it really hard for yourself. And you're limiting how much benefit you can get out of this account. So I think it's much better to do. I mean, again, though, you can get a huge gain and it'll all be tax free. So it's really risk versus reward. Personally, I play it safe, but obviously you can do whatever you want. So going forward, I'm going to be much more focused on building that up and just building up my stock portfolio and maxing out my TFSA. Once that's maxed out, I will switch back to focusing on crypto. I probably should have maxed it out originally, but there was so much opportunity in crypto over the past couple of years that I had to put my focus on crypto. And it was the right decision. So there's no regrets there by any means. And going forward, this will start to increase more since I'll be putting in a lot more deposits month over month. In terms of my budget, this has been like a bad year budget-wise because last year I only spent like $26,000 and my budget projection for this year is $36,000. However, I've done a ridiculous amount of upgrades to the studio, new camera, all these different things, which are 100% tax deductible. So this is kind of a big shift I've made this year for budgeting, is that I've really started to take advantage of tax deductible purchases. So I realized that 100% of my health expenses up to either 13% of my income, or I think it's $2,397 or something like that. All of that is 100% tax deductible. So if you have a business like myself, so now I'm like, okay, well, I should stop neglecting going to the dentist and optometry because I haven't, gotten my eyes checked in like 4 years. And I hadn't gone to the dentist for like 4 years, but I went recently and they said everything was fine. But I've been really neglecting certain things, especially healthcare. And going forward, I'm going to prioritize it now, especially knowing that I can get 100% tax deductibles. I've been getting massages and different things. Definitely take advantage of that. And I absolutely am. So while this looks like way more, I'm really taking advantage of tax deductible expenses now and kind of maxing that out. So this is drastically higher, but it's because of all those things that I'm really taking advantage of. So I'm just kind of finessing the tax system as you should. And I think it's definitely something that everyone should look into. If you can make money in some way outside of your job, if you can make enough, you can start getting deductions on so many things that you would have never considered. 30% of my rent and utilities, all of my cell phone and internet costs, lots and lots of different things. So that's fantastic. And I highly recommend people look into stuff like that. I only spent about $2,000 this month. Very, very frugal month. And I've been just kind of pulling back on my expenses now. Because I know I've been spending a lot and I want to kind of make up for that and squeeze my budget back down. 36,000 is the projection for the year. Ideally, I would like to have it like 33 or less, but we'll see because I want to have it at below 30,000 every year unless I'm buying major things that are tax deductible and that puts me over. Either way, that is everything for this overview. Now to actually dive into all the individual stuff. Although I'll quickly go through the total portfolio here because this gives you a good idea with the pie charts and everything and how everything's broken up. So my total wealth right now is $204,000 and allegedly anyways. And it's pretty solid. Like, I'm pretty happy with that. Obviously, I had a lot more before the massive pullback, but that's fine. Passive income sources, still dividends taking up the lion's share of that, which is expected. In terms of my crypto portfolio, ETH still has the lion's share of the portfolio now, with Bitcoin kind of catching up a bit. So that's good to see that Bitcoin is really starting to gain its value back. We saw a massive jump recently. So that's really, really good to see. And we have the Ethereum update happening on August 4th, I believe. So that is very soon. Very, very bullish on that. I think we're going to see some massive rises in value very, very soon. In terms of... Oh, this is not updated. Yikes. My bad. That was the only one that wasn't updated. All right. Yeah, so I have 71,000 LBC. I did buy a big chunk of LBC recently because, I mean, the price was so low. I know they are obviously fighting their SEC case, but I sold at like 28 cents and now it's 3.5 cents Canadian. And I'm just so ridiculously in the green that I'm like, okay, I might as well throw some money back in because there's just such a good opportunity here. So I'm happy to do that. Pretty inexpensive. And, if it skyrockets back up, then that's going to be fantastic for me. Dash, I've been spending that a little bit, as I always do. Bitcoin Cash and Litecoin as well, but I'm more or less, not a lot has happened realistically. When I actually jump into the individual thing here, yeah, I mean, I spent a little bit of Bitcoin Cash recently because I just needed to pull some money out. But for the most part, the only major buy that I did was the library credits. And I'm not sure if this was last month or 2 months ago, but I also did buy a little bit of Dash. But then I also spent some, so now it's at 34. And all this is alleged for my crypto anyways. Jumping back to the total portfolio. So that's pretty much everything for the growth portfolio. In terms of my passive crypto, I've been a little bit more focused on this lately. So I'm starting to build this up again, delegating my Hive power to D-Lease for different leases to get way more APY, about 13%. And right now you get 10% APY on Hived back dollars in your savings. So the benefit there is that you don't have to power up and lock it up. Your Hive back dollars can be locked in your savings for just 3 days. It takes 3 days to get it out. That's more so for security. But it's really nice that you can just get a very easy savings account that gives you 10%. And that's been really nice. So I'm just going to be building that up a little bit and just maxing out that savings account. And as I mentioned, now that I'm getting back into passive crypto, I might put some into Tron as well and kind of get this going back up a little bit. In terms of my stocks, not a lot has happened. I haven't really switched a lot around in terms of the sectors, but I did a little bit of rebalancing for the individual stocks, which we'll dive into. And nothing has changed for my Bitcoin ETF investment. In terms of dividend stocks, I put in $1,000, bought some Bank of Nova Scotia stocks, bought some Great West Lifeco insurance, and then I also put a little bit of money into Tangerine because I opened a bank account there and figured why not have another investment account there. Again, I'm not sure if I talk about it a lot on this amateur investing updates, but it's really good to diversify not only the assets that you invest in, but the locations or institutions or the mediums you use to invest and store money. Because if you've only got one bank account and that bank account gets shut down, which again, I've seen a million times, you're screwed. If you've got two bank accounts, you're a little bit better If they're different emails, different information, that's even better. If you've got 3 bank accounts, even better. If you've got payment processors, bank accounts, cryptocurrency to spend, gold, cash, you've pretty much covered all your boundaries. And that's exactly what I've done, because I want to be as uncancelable as possible. I don't want financial censorship to ever pop up in my life. And if it does, I want it to be insignificant, because I've spread my wealth out so much. Not too much, but enough that I'm protected, and not so much that, I slow down the effectiveness of what I can do. So with Tangerine, I'm just doing their basic investment fund. I'm just going to be putting a little bit of money in there each month. Not a big deal at all. They don't have an actual investing account on there, so I'm just letting them do some basic stuff. And it's just another way to keep diversifying where I'm investing stock-wise, because I invest on 2 of my banks, and then I have 2 stock exchanges that I trade on as well. So again, it's just important to me to spread out where I'm investing in my wealth and everything, so that if there's ever an issue with one aspect, I still have the ability to pay for things. I still have, everything that I need. I still have a portion of my stocks and all that kind of stuff. It's just, if it's going to help me sleep at night. Most people don't get worried about this kind of stuff or even think about these kinds of things. That's because they're not like looking into these things, and they're not seeing this happen, or they're thinking, well, I don't do anything wrong, so this won't happen to me. We're seeing they're coming up with new reasons all the time to censor you financially, whether it's politically, whether it's morally, like sex work, for example, or it's, to do with just you doing something that doesn't fit with what they want. Like you run a cryptocurrency company and they'll shut down your account, your wife's account, and your children's accounts, like we saw with Library. And these are just some examples, but it happens all the time. And we're moving to this era where if you get canceled in one place, you're also going to get canceled everywhere else. So it's not even just being diversified. It's being diversified amongst the different, value systems, because, there's PayPal who will ban you if Spotify bans you. And then there's, I have like my crypto accounts that will never be affected by anything. So that's why it's important to have that distinction and to understand how that's all working. And then the other reason that I didn't get to yet is just that the reason that you want to have all this stuff backed up, and the reason that most people don't really care, is because they don't have the knowledge and understanding of cybersecurity and how all these things can happen. Even if it's not malicious, even if it's like an error, or, they get hacked, right? Like it's not the institution being malicious, but it's someone else being malicious. Whatever it happens to be, there's so many different ways that this could negatively affect you. Like, what if there's just simply a power outage for a very long time that prevents you from being able to get the money out of your bank, or whatever it happens to be? There's so many different reasons that you want to have that financial protection. And being someone who studied cybersecurity, networking, IT security at school, I extremely value, having surveillance, having security, putting things in a safe, having backups, protecting my passwords, all that stuff, all the stuff that everyone should be doing, but most people don't really learn about why it's important, or, whatever. So a bit of a tangent there, but I think that's really important. Anyways, that's pretty much everything that I've done for the stock, my dividend portfolio. Not a lot, but I do have some things marked off for my next investment and what I'm going to be doing in just a couple days when I get my money. In terms of growth, again, this hasn't really changed very much. It's gone up a little bit. I'm still way in the negative, which is really unfortunate, but it is what it is. Actually, speaking of gains, my unrealized gains on my dividends are 13.14%. If you include the dividends that I've earned as well, which you should, it's actually 16.33%. And that's nearly $5,000 of gains. So, since I started investing in dividends, I've made about $5,000 worth of gains in the past 2 years. Not crazy, but it is significant because 15%, if you can get that regularly, like if you keep getting those gains every 2 years, that's going to be very significant. Mind you, we had, one-off events like COVID that gave me a very, very good market investing opportunity that we probably won't see the likes of again for quite some time. But who knows? I'm just going to be dollar cost averaging in as I have been. With actually more focus on this lately. In terms of staking crypto, as I said, I'm starting to get back into it now and just focus on building up my crypto. These are old and outdated, so I'll just remove that. So now my MTR on Den is up to 280, which has all just been earned since like 190 or so. And then previously I had like 300 or 400 Hive, and I've earned a bit, and I'm just staking it all now, as well as putting in my Hive back dollars, which is actually HBD here. A lot of corrections that I need to make, I apologize, but it's just little small details. Anyways, though, I'm going to be building this up and starting to earn more, and you'll start to see that. Probably not in the July report, but in the next report after that. And then, that's pretty much everything. The rest is just like the deposits I've made and stuff like that. So that is everything for today. I'm very bullish on crypto. We just had the B Word conference, and we saw that Elon Musk said he didn't sell anything. He's just been holding. We've seen large gains after all the Bitcoin shorts liquidated, and just everyone getting back into that bullish hype, especially as I mentioned with the Ethereum update happening August 4th. Lots to look forward to in the very near future. So I'm bullish for the next few months. I'm really excited to see how the crypto market reacts to everything going on. I'm going to be still focused, though, more so on my stocks and my and maxing out my TFSA, as I said. But that's just because I've really over leveraged myself into crypto. Most serious investors would look at what I do and say this is like ridiculous and very, very, very risky, and I would agree. But I have that much confidence in where crypto is going that I think it was the right move. And so far, everything I have done has been the right move. One thing that I did want to talk about was, people are going to always have bias for whatever they did to be successful. For example, if someone sees my gains of, going from, $5,000 and then 2 years later, I'm now at $204,000. A lot of people will see that and say, that's amazing. How do I do something like that? And that's what this is all for. It's to document everything, share this journey with you. And then this would act as the framework so that you would know exactly every step that I took. And you could generally do something similar according to what works for you. But this is giving you that framework. So then if someone else comes along and says, well, actually, I only invested in real estate and I'm much, more successful than Scott, so don't listen to Scott. You're going to get really lost in the weeds with stuff like that. Plus, I don't think it's realistic to assume that someone's going to, whatever the percent gain from 5,000 to 204,000 is, you could never do that with a house, right? Like, it's just not possible. It's not even realistic to even say that. I think it's kind of silly. But, there's many people who would say, yeah, but then you're wasting rent and you're doing all this other stuff. You're always going to get both sides of the argument It's really just, this is for people who have like nothing and you start from nothing. If you're starting from nothing, you don't have any money or any down payment to afford a house or anything like that. The real estate is just completely off the table. Like you can't even do 10% down payment. So real estate in that sense is kind of just 100% off the table. It could depend where you live if there's insanely cheap housing. But, to buy a $50,000 house and put $5,000 down payment and then just, it's probably going to be a ridiculously terrible place to live. But, I think it makes a lot more sense to be investing, build up a portfolio, and then either live off that passively or sell that out and then just buy a real estate property like outright and then spend no money, wasting money on interest and all this other stuff. I really don't like the concept of paying interest where I'm paying extra money than whatever the thing is worth, and that money just kind of goes to nothing. Because people are always saying, yeah, but if you have a house, you're putting equity in, like you're going to own that. Yeah, but you're still also paying like the mortgage interest, which isn't equity. That's just going to no one. Like that goes to the bank. That's not something that you keep. Regardless, though, this is just to say that when you get advice from people, they're always going to give you based on their own biases. I'm doing this from the perspective of someone who's like starting out, you've barely got anything, you have no idea what to do to start, but you want to build up money to be able to either like retire with or to live on passively or whatever it happens to be. The general theme of this channel is you build up a passive income to then retire and cover your lifestyle. That's generally what I'm doing and where I'm headed. So you just got to make sure you have that context. I think it's important to highlight that just because, again, a lot of people are going to say, well, you did it differently from what I did, and thus you're recommending this, but I did it differently and I'm still successful, so you're wrong, or whatever it happens to be. There's always a million different ways to do something. I'm just trying to provide the simplest, cheapest, fastest way to financial independence, and ideally with passive income. Let me know what you guys are doing, though. What did you think of this episode? I did a lot of ranting, though I felt it was somewhat insightful, hopefully. Let me know, though, in the comments below. How are you earning passive income? What are you investing in? Was this helpful for you at all? Let me know all that good stuff in the comments below. And definitely comment #1ham in the comments below if you did watch to the very end, because then that lets me know that you did actually watch the whole thing. Thank you so much for watching. I'm Scott Cunningham, aka Scottsy Business, signing off. Cheers.